Good day. Ira Epstein of Linn Associates with your metal market wrap-up, and here we are now on Tuesday, December 1st, 2020, 5:35 p.m. Central Time. So the stock market giving back a chunk of what it made today. The market was up sharply, hit some new record highs, sold off from that, still closed with good gains today, but gave some of that up. The wild action was silver, up $1.50 an ounce today. That was a huge move. And if you look at the gold, you had a nice move, but nothing to compete with this. And of course, we're over the 350 area in the copper market. Now, there's still a lot of talk out there, people wondering what happened to the copper-gold ratio. First off, I've been trading a long time. I don't know any of my clients that have ever brought up to me the copper-gold ratio. And I talk to people all the time, and I've been thinking about it. I know that analysts, some look at that. I don't. It's just strange. Well, maybe I'm the one wrong. Meanwhile, the dollar dropping. I was talking today to some of my clients that have to hedge in the euro, and I told them we're up to an area where you can pull back here. Not a surprise, but I think the dollar, well, I think it's going back under the 90 level, and the question is how much lower will it go? Why? Well, it's a combination of things. It's going to be a combination of money that we throw at the economy. It'll be who gets the biggest bang for the dollar down the road. It'll be the fact that the Fed wants to keep interest rates low for a very protracted period of time. It could be the case that we don't even get the fiscal support that we want, depending on how Congress hangs in there. And the question is who controls the Senate. That will be a big time question. If you have a split government again, it's got good points and bad points. So we got to think that through. Meanwhile, the inflation scenario is just not here for that market. When we take a look at gold, you can see how the market is just plain falling apart. It's gotten a bounce. You're up $30 for the week. It's the second day of the week. Actually, we're in the third trading session since we're at Wednesday. When you take a look at a daily bar chart, you've got a nice bounce in the market. The swing line has still got a pattern of lower highs, lower lows. You'd have to take out this high, and I'll come right to it so that you can see it. And that number is 1822.60 to negate the current downtrend in the market. So as I'm looking at the market, that would be one of the numbers that I'd be interested in seeing if it can get through. So far it hasn't, but let's assume it does. Well, it breaks that pattern. It doesn't mean that it starts a bull trend. Fail to do that, and you give the bears more reason to be enamored, possibly. We got to look and see the slow stochastics. They're going to be important. Just yesterday, as the market was down here, and I told you, if it rallies, I'm looking for resistance. The first resistance, the 200-day moving average of closes. You tell me what the market did and where it's hanging right now. So that's the point that I saw in that market. Was I looking for a bounce? You've been riding the lower Bollinger Band and you finally turned to the right-hand side. So it broke away from hitting it 1, 2, 3, 4 times in a row, and it moved to the right. It hadn't closed 4 times under it, but it was riding it. Now the market has gotten itself somewhat straightened out, and that all happened at the expense of this. If we take a look at the slow stochastic reading yesterday on the close, fully embedded. Today, the market loses that embedded reading right at the end of the day with the reading of 2291. Typically, that means the market's going to make a move to the closest moving average. We already said it's there at the 200-day. If you need me to remind you of that, it's right here. That's the closest number, and it went there. It can certainly make a move to the 18, but it has to clear this high. That's going to be the key to the market. And as we take a look at tonight's action, you can see you're sort of stalled there, but you're even losing further. That reading. The question is, will you get over 30 in this number and get out of the 20 level there? If you do, the market either decides to hang at the 200 or get up to the 18. Either way, on the current formation, nothing turns bullish. That's the point that I'm leading you to. When we look at the gold-silver ratio, silver's again jumped on to gold. You can see how the market's gone from back here, just what were we? This day we were 78.98, and tonight we're sitting here at 75.78. So you don't need 3 ounces as much of silver as you did just 3 days ago to get an ounce of gold. That's the way to look at it. And when the market drops in numbers, it means silver is stronger than gold. Now, we had also talked yesterday how the silver market, if we'll get over here, we are. Here's the market. Was the market embedded? Let's count. This is yesterday, not the day before. Not the day before that. So the answer is no. It was an oversold market coming in, and you got to bounce. Let's come back right here. If you bounce, what's the closest moving average? The 18-day. The 200's down here, so that's not going to be a resistance point. It would be the 18. You went to the 18 and you're sort of hanging there. Unlike gold, you negated the downtrend of lower highs, lower lows. You've gone flat again. I don't understand why the silver, and I've said this for a long time, didn't track the copper market better, because I see them both needed in industry. That's not what gold's real use is. And we'll see what happens through this part of it. In the copper market, you're 3 days in a row over on a closing basis as of today, the upper Bollinger Band. More important, you have an embedded reading. Let's look at that. That means both the K and the D lines, the red and the blue, are going sideways over 80. And what else? If you take a look at the market, it's just riding that number. In fact, it's been riding and hitting it 1, 2, 3, 4, 5, 6, 7, 8 days in a row. That's an amazing feat. It's a sign of how strong the market is. Yeah, I know you're going to say, oh, the market's overbought. It's going to do blah, blah, blah. Well, is it overbought back here? Which number do you want to pick? This is a sign of a strength, not weakness in a market. And Bollinger Bands give you that idea, especially when you lock in with the slow stochastic. When I look at the platinum, let's take a look at yesterday. We had yesterday a day that took out the day before outside day down. Let's review the rule. When you have an outside day down, if you take out that day's high within the next 2 trading sessions, in this case it happened on the next one, often, I want to use that word very clear to you, often, not always, often, the market makes a run to the closest moving average above it that I use on my charts, and or the slow stochastic. In this case, the slow stochastic. I feel very comfortable that that's exactly what occurred. It was a bear trap. And on that bear trap, they sprung it, and away you went. What else was happening in this market? Outside day down with an embedded slow stochastic reading. Do you pay attention to that? Not this guy. That rules the day. And I still like the market there. Now the market's gotten up to some numbers that are interesting. Still bullish. Still bullish. Can it go higher? Yep. Could this be a base? Yep, it could. Palladium market. Palladium market is still doing this, hitting almost every single day, the 18-day average. Until it can tell us what it wants to do next, I don't know what to do with it. It's got a 73.49 reading. It's already overbought. It is in an uptrend. If it wants to continue, a bigger resistance would be 25.07, getting back up towards these, all-time highs in the market. So even though it's doing this action, I don't want you to think it's in any manner bearish. It's hard to get long the market, I admit that. But it's harder to not see that you're in a very clear uptrend in the market, and the 18-day average was the number that held it together. As for the dollar index, let's talk about this one. This is a hard chart. On Monday, you had an outside day up. If you take out the low of an outside day up, there's no moving average I have on the chart that's big, that's under the market. So I don't know where it's going. That's just the way to do it. Normally this happens, either you got the Bollinger Band or a key moving average. The trend is down, you have an embedded reading. You don't fight embedded readings, and that's where you're at with this. You know, if you like what I'm saying here, you're probably going to like a lot of the information in our futures trading kit. I want you to think of it this way. It's one piece of software where you can get your charting software from us. You can get within it, if you want, sign up for, if you haven't seen my research, I'll give you a free trial to it. You get all these technical chapters, brochures galore, and some of them created by moi. this one, typical chart patterns. Worked hard on that one, 14 of them. Everybody says 10. Well, there's really more than 14 also. Then we talk about, oh, you're going to see cause and effect sheets in here, a rune indicator, pivot point. Everything that we do is really in here. And I'm going to redo this again this coming year. I'm going to add even a lot more to it. Now, cause and effect, if you don't know what it is, Volcker came up with that, Paul Volcker. It was M1, M2, M3, and his understanding of it. And I learned a lot from that because the velocity of money moving through an economy is important. Do you use it when trading? You'll say no, I say yes, because traders will focus on it to see what bonds and notes might be doing. They want to see how that velocity of the money is moving through it. Is it in vogue today? Not as much as it was back then. Is it mentioned today? Regularly. If you're reading the economic data, look at Rick Santelli. He'll tell you about that. In any case, to get this, it's free. Just go to our website, www.iraepstein.com. We'll get it right out to you. Hit one button, it unloads, and away you go from there. We want to give you at the same time a user ID and password for the charting software, so be sure you get that from us, all free. Have a great day.